Hello, everyone. Thank you. Thank you for joining the webinar today. Real great pleasure to see a lot of you back and coming back from yesterday's webinar and joining us again. That's fantastic, fantastic news. It's today we're talking. Obviously, we're talking about how markets are moving. As always, we're talking about the coronavirus outbreak and what's been going on in the market. So we'll give you a brief update about how markets are moving and what's moving these markets. But also, we are talking about an introduction to trading here today. So it's not. We're not going to do a whole host of we're not going to go for too long, number one, and we'll not focus too much on the markets. We will look at other areas of trading, and we will look at other basic informations about how we're placing these trades, how we're using the system, all of those various different things, and make sure that people that we can give you an idea. And of course, that's the big thing. And what we'd also like to offer today is we'd like to offer give you an offer, a bonus offer today, if you are to sign up to our to an account, and if you if you deposit your money in your account, and our minimum is $250. So if you deposit $250 into your trading account, new trading account, today, we will give you a 20% bonus, and that is incremental. That will incrementally go up as your deposit is there. If you put $500 into your account, you'll get a 30% bonus, and if you put $2,000 into your account, you'll get a 40% bonus. And this bonus is in your account. It's in your account. The money that goes into your account is in your account. So nothing there nothing that you put in is anything to do with a charge or anything along those lines. All of that money is in your trading account, and you will see it. I will show you here on the platform. You'll see it in this number down here. Now I'm on a test internal account here, but this is where you would see your equity in your trading account. It would be in there. Once you put your money in there, you will see it in there. Now, let's look and start off and see how these markets have been moving, and see what's been going on. Well, it's obviously been a very, very busy couple of days again for these markets, and it's crazy to see the sorts of market moves that we've got. I'm in London, and I can tell you that London is we are in the first day today of today is the first day of UK lockdown. So the whole country is locked down. We're not allowed to leave our homes. And so it's a crazy time to be in these markets. But let's and I live in London, so it's like a ghost town around here at the moment. But let's get into the markets and see what's been moving. I think the one place we should start is on Wall Street, is on these markets, and we are seeing some pretty aggressively strong gains today for financial markets, and especially on Wall Street. We are seeing the Dow trading up over 1,000 points, 1,340 points, 1,350 points. Markets are still going up as we speak. The S&P's up 153 points overall. Both of those are close. Dow over 7% and the S&P just around 7%. So massive moves higher. And this is because, of course, what we've seen over the last couple of days. Yesterday we saw a big sell-off. Today we are underpinning some of these. But what's important at the moment in these markets is that we are below this level here. And if you can see this level, I'll highlight it on the chart for you. This level here is very important, 21,100. Okay, that's a key level. This level is Friday's highs. That's the key one we need to look at. So we need to have any sort of recovery. We need to be above that. Now, anyone was in our seminar yesterday, in our webinar yesterday, would know that we spoke about this area, this 20,000 level. We spoke about this 20,000 level, and that's going to be an important area for us to talk about. That was a key resistance level on the upside, and I'll talk about trading around these in the next few minutes or so. Obviously, we're going to go for only about half an hour today, maybe a slightly longer if we get some questions. And by all means, please ask some questions if you have any questions. I can see a few questions coming in already. And if you have there is a chat function as well. You can ask various different questions in that chat function as well. So if we see these markets have been going up over the last day or so, mainly because yesterday we saw such a big sell-off, but what has happened in the US is that there is a $2 trillion bailout plan sitting in the Senate, and there are two political parties, the Democrats and the Republicans. They are fighting over the ins and outs of that particular deal, what it means, what's in there for various different markets and various different people, how it's going to impact the market, and all the individual points around it are being discussed and thrashed out in Senate. Now, it's been blocked twice by the Democrats in the last couple of days. And that's what led to the downside in markets yesterday. That's why we saw such a big sell-off, big downside move. But the reason for recovery today, the reason for this upside here, is mainly because there are signs that both the Democrats and Republicans are ready to negotiate. They are ready to get this deal through. They're trying to put party politics aside. We know the Democrats don't like Donald Trump at all. We know the Republicans don't really like Donald Trump, but both sides are trying to push through this deal that will see trillions of dollars in bailout money for the US economy, both for small businesses and even for individuals. So we're looking at what's called helicopter payments, where this is where the government, the US government, goes in and they will give each individual household $3,000 US. That's for a family of four. They will get $3,000 US. Now, this is obviously this is monumental times. Yesterday we spoke about the fact that during the financial crisis, the bailouts was the bailout for the US banks was $105 billion, and the bailouts that we're seeing across the globe for the this time for other, not just financial institutions, but in terms of the overall economic bailout, just completely dwarfs what was done in 2008. This is the biggest economic crisis we have seen globally for years and years and years. So people asking questions. If you have something, someone's asked me my take on gold. I will look at that for you in a moment. But please ask questions if you do have something like that. You want me to look at an individual currency pair or gold or stock market or anything like that. Please put that in, and I will take a look at it from a technical point of view for you. And I will talk about that on the webinar. So the key point here is that we have seen this bailout plan coming in, and because there are signs that both of these sides are willing to discuss it with each other, then of course the key thing is that is signs that we will get this pushed through. So there is optimism that the market will get this pushed through. That's why this is coming higher. But you can see here that we're kind of stalling around this 20,000 level. We have gone through it, but the market hasn't enjoyed going through that level and has come off a little bit. So we will be looking at that as a particularly important area of the market to keep an eye out for as we go through. That's on the Dow Jones. Now let's look at something else which is particularly important for these markets at the moment, and that's of course the oil price. Let's jump into the oil price. Where is that? Here it is. Let's jump into oil price, and you can see again we have seen quite a nice little turnaround in terms of the oil price. It's come off over the last few hours or so and slipped from above $28. Excuse me. It's flipped from above $25, not $28, from above $25 and dropped down to around where we are at the moment. But markets are pushing at the moment. $24.34 is much better than the area that we were previously, and of course they were down much lower. If we go back to the daily chart here, we can see where we were in terms of the absolute low here. If I show you this, the lows that we got to were below $20, just around. It actually did trade below $20 at the time. So we are looking at real negative performance for oil. But the fact this is jumping up a little bit is helping some areas. Now you have some areas, some currencies which are they're currencies which are more dominated towards commodities. Now, those sorts of currencies are the Canadian dollar, the New Zealand dollar, and the Australian dollar. They're very, very correlated to how the oil price works. So movements on the oil price tend to be pushed into movements on currencies like that. Now, if we look at the Aussie US dollar, this one here, you can see we've got two areas here where the market is looking particularly range bound, if you like. We've got the low point here, 56.60. And we've got the upside there at 59.85, 59.86 or so. So you've got a bit of range bound market movement within there. If I take you to a daily chart, you can see where we are with this at the moment. We've jumped from these low points and starting to move higher. So there is a feeling that there is a degree of recovery happening in some of these markets. What will be interesting, and if I flick you back to the Dow Jones again, what's going to be interesting and what's going to be important is if we start to hold on to some of these gains, because the situation being that if markets continue to move the way they are, which has been downside followed by a recovery, but the recovery is never as big as the downside moves. Now, if the market can hold on to this, trade higher today, trade over 1,000 points higher for the Dow Jones, and then tomorrow continue that upside, that will be seen as a real sign of positivity in the markets. Not the fact that there wouldn't be a sign that this is turning itself around, but it would be a sign that markets are starting to look that little bit, to have a little bit of light at the end of the tunnel. Especially if that stimulus plan in the US gets approved, that would be a great help for the stock market. But what I would also say to you there is that stock markets tend to go up, but as we said yesterday, when stock markets go up because of stimulus, it means the US dollar is falling lower. And that's an interesting point. So let me just take you out here and show you what's going on. We are trading, we get that dollar index, there it is. We are trading at these lower points and the dollar index is starting to come higher as well. So this shows us that there is a good sign here that we are seeing markets moving from one side to the other side. So we are looking at both stock markets and the US dollar moving in tandem at the moment, which is a positive sign. It shows you that it's an overall market move rather than anything else. So that's the first time we've seen something really like that continue to start moving these markets to the upside. So with the dollar going up because of the safe haven aspect, which is, I imagine, where we are on this, and equity markets going up, we need to have a look at how we trade. Now, of course, we do need to, the title of this webinar is Introduction to Trading. So I just wanted to quickly run you through some of the basic forms of what we do when we look at these markets and how we would get into trading. And I want to take you to something that we would trade on. Let's look at the Dow Jones, maybe. Let's take a look at this Dow Jones and see if we can place a couple of trades here. Now, the way we would look at this at the moment would be to come into the Dow and we would say, okay, the market is going higher. Where are we trading here? The market is going higher at the moment. Now, if I was to look longer term, I would say the market is going down. Last couple of days have been higher, but the market is going down. If I now look at this on an hourly chart, we can see that this is starting to look a little bit more positive. So I would say to myself, well, what am I going to do? Maybe I'll look to buy into this. We think this 20,000 level is going to be an important one, but we'll look to buy. Now, I was going to just do a test trade on here. It's not going to be a live trade, but you can see exactly what's going on and you can see the markets will react in a similar way. But what we have to do is go in and discuss exactly how we're going to trade. Now, if we're trading on the Dow Jones, we'd look to go in and we'd look to buy and we'd look to trade on our market. But when we trade on a currency pair or trade Forex, it's slightly different to that, because if I just take you to one of the currency pairs and let's look at euro dollar. When I look at euro dollar, I'm looking at two different assets. I'm looking at the euro versus the US dollar. When I look at the Dow Jones, I'm just looking at the US stock market. And in fact, I'm only looking at 30 stocks in the US stock market. When I look at the euro dollar, I'm focusing a little bit more on two different areas. Yes, one of those is the US, the US market, and of course the US economy, because the US dollar is undoubtedly pegged to the US economy. But we're also looking at the euro. So anything that comes out and moves the euro can move this pair. And that's what we call them, a pair, the euro versus the US dollar. That's one currency pair. Now, we have that, when we have a currency pair like the euro dollar, it is the most liquid currency pair in the world. Now, it's where 25% of the whole world's trading on foreign exchange goes through euro dollar. That's how important this currency pair is. And that's why so many people trade it. Now, we've seen the situation here where we're seeing so much going on around the coronavirus outbreak that markets are looking incredibly volatile. There's a lot of market movement. So we must make sure that when we're trying to make our decision on trading, we're looking to almost find a way to predict where we're going to go. Now, how do we do that? Well, to predict that, we look at the charts. And we can look at two things. There's two different types of trading. And again, we covered this yesterday. We have fundamental trading, which is the study of the news. And we have technical trading. Now, I just want to show you something. I did show you this slide yesterday. But for those of you who weren't here yesterday, I do want to show it to you again. Fundamental trading is the study of the news. So it's studying the news like the coronavirus, the geopolitical events which are coming out. So maybe a trade war between the US and China. Earnings figures on stock markets, on individual stocks, macroeconomic announcements. They're things that come out through the economic calendar. So those things are all fundamental data. That's the things that we look at there. So the news, basically, things that come out in the news. The market we're in at the moment is very much dominated by the news because the markets are moving on, number one, the coronavirus outbreak, and number two, they're moving on all of the stimulus packages that the UK, the US, the Eurozone, they're all pumping these into the economy. So that's what we're focusing on. It's the news. But the best form of trading couples fundamental trading and technical trading together. And technical trading, technical analysis, is the study of price action. So the study of the charts. And that helps us predict where the market's going to go. And technical analysis, so the study of charts, rests on the presumption that levels or prices that were important in the past will be important again in the future. Okay, so let's stick ourselves back to the platform and have a little look at what's going on there. So let's focus on what this is exactly showing us here. This is called a candlestick chart. You can have your charts anyway. You can have them as a line like this. You can have them as a bar chart like this, or you can have them as candles. I like to use candlesticks, and the majority of traders do tend to use candlesticks. They're slightly more complicated, but they're still quite easy to understand. So let's take this candle here for argument's sake. This is the one we're going to look at. Now, in this sequence of candles, a red candle means the market has gone down. A green candle means the market has gone up. Okay, so that's what that means. Green candle down, red candle, green candle, market gone up, red candle, market gone down. Now on this red candle here, the top flat line, this top flat line here is the opening price of this candle. Now every candle here represents, in this example, 1 hour's worth of trading. If I go to here, each candle represents 1 day. If I go to here, each candle represents 1 week. If I go to here, each candle represents 1 month. So let's go back to the hourly chart. This is our candle we're looking at. On the red candle, the opening price is the flat line at the top. The closing price is then the flat line at the bottom because the market has gone from here to here. And then the wick, or the shadow, as it's called sometimes, is the high point of that period and the low point of that period. So that's how the candlesticks are broken up. Okay, that's how we look at those. And we can try and predict these things as that level, talking about areas in the market where these have turned around. And what we're looking at here is a potential trend line on an hourly chart. So we have one area here, the bottom area where this market started. And then in this trend line, the market came down and retouched it again. And when it came to this point, it jumped higher. We saw a big move higher in euro dollar. And then the market has been trading sideways ever since. Now, what we would say as a technical analyst, And looking at the news flow, we try and look at the news and see if that complements what we're looking at in terms of technical trading. So if we look at this market, we can see that the last 1, 2, 3, 4 hours, the market has been coming off very aggressively. Now that would be US dollar strength, because in this situation, euro versus the US dollar, the euro is the first side and the dollar is the second side. So the euro is the dominating currency. So if this goes down, it means it's either euro going down or the US dollar going up. And that's what we've seen here. The US dollar going up. Now, what we see is that the US dollar acts as a form of safe haven when it comes to trading, and especially in times of crisis. And of course, I think we can all agree that we very much have times of crisis at the moment. We are very much in financial crisis. So what we would say in our trade here is we would say there's one touchdown at this area. The market has come down again and hit this lower area, and it's gone up again. And now it's falling back down to this lower area again. It's falling back down to this kind of area. And I would say from my point of view here, and again, remember, we're just going to place a test trade, but I would say the market may come lower down here. Now, what we could say, we could do something else. We could say, okay, well, the market has started to maybe hold up around this area. Is there somewhere where I can put another line in? But if we do this, we end up trying to make ourselves do something that we don't necessarily want to do. So I think this is going to break through here and come down to this lower level. So we could sell, or what we could do is wait. So we could either sell this market and come down here, wait for it to come down, and then when it gets to this level, this line, because the last 2 times the market hit this line, it went higher. I think the next time it hits this line, it's going to go higher as well. Because we've had 1, 2, and the next time it does it, I think it could do it, go higher again. So we would wait. But for argument's sake, in this situation, we are going to sell, because we're going to try and make some money from this market falling from here to here, because that's where we think it's going to go. So what I do is I right click on the chart and I go to trading, and then I go to new order. And this brings me up this order ticket. Now I can trade from one lot. This is my one lot here. And this is where I trade. So I'm going to trade one lot, but there's 2 things in here that we have to put in place, which is our stop losses and our limit orders. Now, what a stop loss and limit order is they're risk management tools. They're risk management tools, and they are there to protect us. So if I am to sell this market and to see it come down lower here, then I would want to protect myself by having a stop loss in place, protecting me against the market going against me. But for now, this market's bouncing around all over the place, but we're going to do one and we're going to sell. So all I do is I go in here, I do one lot. I could do 100 lots if I wanted to, 2, 3, whatever I want to do. I'll do one. This looks like it's going up, but we'll sell it for now, just to have a quick. In fact, let's have a little look. Let's look on the shorter term. Let's see what's going on. Looks like it's jumping. It's bounced off this trend line. Maybe we will buy it. Let's see if people can, people in here, let's ask a question. I'll ask you the question, do you think we would buy this or sell this? You can answer me in the chat. Just write buy or sell. What do you want to do? This is only a test account, so we'll see. Write down what you want to do and I'll do the most. Okay, lots of replies. Lots of replies. Everybody's saying buy. Okay, everybody's saying buy. So we'll buy it. Let's buy it then. Let's see if we're right. So everyone wants to buy. Yeah, okay, everyone wants to buy. Fine. So let me go in, trading, new order, and we're going to buy one lot. Done. That's the area that we've bought. That's where we're buying. Now let's see if we can look at our position. We can see our position in here. Let's break down this information. Type of order, we bought, we buy the market. Size, one lot. Symbol, euro, US dollar. Euro, US dollar. Price, this is where we bought it, 107.95. Stop loss, we don't have in at the moment. Take profit, we don't have in at the moment. Current price, 107.96, making $10. Our commission charge, making $20 now. Market's moving, but this is how quickly the markets move. So we're jumping around. So we're very early. We've done one or two pips. So we're buying it. We followed what everybody said, and we bought this market. So now what we want to do is protect ourselves. So if we're buying here, if we're wrong, it means the market's going to go down. So we need to place a stop loss. Now, where would we place a stop loss? Well, I think this particular trend line is quite interesting. 1, 2, 3 touches, 4 touches, 5 touches, and the market's in this area. So we would say if this breaks below this trend line here, that is a selling signal and a very negative signal. So let's say we'll place our stop loss if it goes to, let's say, 107.65. So we go in here, stop loss, 1.0765. Stop loss in place. Our stop loss is there to protect us. If it comes down all this way, we will be protected from that point of view. However, we also want to take some profit. We want to know where the market's going to go on the upside. So let's take some profit. Now, if it does rally, I want it to go up to this high. If it breaks through that high, it's very positive, and it could go even higher still. So we will say we'll take profit up at that level, which is probably around 108.80, I would say. So we go in here, double click. Now, I'm just showing you this, how to do this. We would maybe take a lot more care of our trading if we were doing this in another way. But 1.0880. There we go. That's our that would be our take profit. So in fact, we want it slightly higher than that, don't we? So let's say we want it up there. That's 108.87. So we weren't too far out, but let's put it at 108.87. Let's not underplay ourselves. 1.0887. There we go. So now our position is up there. So now we're in the market and we are protected because we know that we bought $1 at 107.95. Our stop loss is 107.65. So 30 pips is our loss. But we know if the market goes down to 107.65, we're protected because if it goes down here, it will close our position and we will be out of the market. No more risk. However, if it goes higher, we take it all the way up to 108.87. And if we do that from our buying point all the way up, if we do that from our buying point, which was here, all the way up to here, that's going to give us 90 points. So a real good, strong movement to the upside there. That's what that would give us. So very, very positive for us to do that. Okay, and that is a very simple trade that we could put in just using the basic forms of technical analysis. Very simple. So someone's asked me, what happens if I don't set a profit limit? Well, if I don't set this, we don't have to set that. This one is more important to set because this protects us on the downside. The stop loss protects us. This one up here, it just takes us out of the market. So we don't get too greedy. We could leave this and let this run. And it could mean it goes all the way up and we could see it go 400, 500, 600 points. But we don't know, do we? And it's good to have a strategy to take your profit when you have some. So if the market does move up here, and it is particularly positive on the upside, then the movement from this point to the high point would be particularly positive for us because we could take our profit at that high point. Okay, so it's just a matter of taking profit when the profit is there. You could, of course, leave it, and that would mean you would make more money on the upside. okay, if the market went higher. But we have no guarantees. The market could come up here, you could leave it, and then it could go all the way back down here again. But that's entirely up to you. Your risk strategy and my risk strategy may be very different. They may be very different things. And the way we operate in these markets may be very, very different. So it'd be interesting to see exactly where we are. What you do and what I do are completely different things. So, but that's the basics of how we place our trade and the very basics of how we read the charts. So if I just show you something else, we can pinpoint these sorts of levels everywhere. Someone asked me about gold earlier. Let's look at gold. The rising gold, 106.60. We can't get it on a daily, 106, $1,600, back through $1,600 today. Now the movement is very high, but let's go on an hourly chart. Let's have a little look. The movement is very strong. Let's go on a 30-minute chart. Now we can start to get an idea of where this is going. It's really strong. 15 minutes, but there is a level. Market 1, 2 started being holding up at this lower level. Moving average, 55 period moving average in there as well. Market comes back down to here. We want to buy and move it higher. So on a 15-minute chart, that's how we spot our entry level. We go, okay, market has been holding up around this level on the downside. So that's a support line. If the market comes down back this support line, I think it's going up again. So if it comes back down here, takes a breather, I buy at this lower point and take this higher. So it's a simple thing to be able to move as these markets are moving. Okay. And that's the basics of how we enter our trades and the basics of how we move. But remember, this is gold is a currency pair as well, the way we trade here. So it's gold versus the US dollar. The trade we were looking at here, excuse me, is euro versus the US dollar. Remember, there are two aspects to this, the euro side and the US dollar side. Now, at the moment, it's very different because the markets are dominated by what's happening in the US because of the amount of stimulus which is being pumped into these markets. Is particularly, it's an unprecedented situation. We've never been in a situation like this before in modern times. This coronavirus outbreak is the biggest thing to hit the markets since World War II. Forget about the 2008 financial crisis. We haven't seen this much economic impact to the world since the Second World War. So that's how big what's happening at the moment is. But that means there are opportunities in trading, and that is key. Guys, I'm going to just slightly tell you something more here about the offers that we have on before we finish. I'd love for you to open up your accounts. So open up an account and fund your account. If you fund your account today and you say it's because of the webinars and we can verify that you came to our webinar, what you will get is a bonus into your account. So we will give you a bonus into your trading account. And remember, when you deposit, your deposit money of $250 or whatever it is you put in will be seen in here. It goes directly into this area. So it's not a charge. It goes directly in here and you can see this money into your account. So if you deposit today on the back of the webinar, if you deposit $250, we will give you a 20% bonus. Okay, we'll give you 20% bonus. If you deposit $500 into your account today, and remember that $500 is sitting in your account, that is your money and it is completely safe in that account for you, that if you deposit $500, we will give you 30% bonus. So we'll give you 30% more in your account. If you deposit $2,000 today, we will give you a massive 40%. A massive 40% bonus will be put into your account for you. Okay? So that's what we're offering on the back of the webinars. Now, if you would like to do that, please send us an email or speak to our sales team. They will be calling you and speaking to you about all of these various different situations that are going on. And this is the most perfect time to get into the markets because there is so much volatility. And here at SM Invest, what we're doing for you is we're giving you these bonuses, but we're also educating you. Every single day this week, we have a webinar. We will also do more webinars next week and the week after. And while you're at home and maybe the government says you can't go out at the moment, well, it's the best time for you to learn how to trade. And I will be doing a webinar for you every single day about the basics of how to trade. Every day we'll talk about the basics of how the markets are moving, but we'll also show you various different new educational techniques about how to trade and how to profit when you trade. So guys, thank you very much for your time today. Remember, if you deposit $250, a minimum deposit, that will be a 20% bonus for you. If you deposit $500, that's a 30% bonus. If you deposit $2,000, that's a 40% bonus into your account. And remember, all of those deposits go directly into your trading account and they are ready for you to use to start trading. Guys, thank you very much indeed for your time. It was a pleasure speaking to you, and I hope to speak to you again tomorrow at our next webinar and on Thursday and on Friday. Thank you very much indeed, and I will speak to you again.